welcome to Construct Your Life. This is Austin Linney here. We have the privilege and the honor of having Mr. Abreu. How you doing, sir?
I'm doing good, man. Nice to see you.
Nice to see you too, man. This gentleman right here, don't let him fool you. The silent killer in multifamily, bringing it crazy. It was super easy. He just gained like a couple units overnight. It's not a big deal. No worries about any of that stuff. No, he owns a construction company. He's done a ton of flips. They bought a ton of units in the last, year or so. And he's going to talk about all that stuff. And I'll let you start where you want to start, sir. This is your show. We're going to hear about your story. And thank you so much for coming on.
Thank you, man. Thank you. I guess I'll start from the beginning and kind of give a quick intro on where I came from and what I'm doing right now. So, born and raised in South Florida. Went to college to study to be electrical engineer. At some point, I decided I did not want to be an engineer, and I started researching different individuals that had been successful in building a lot of wealth. Kept going back to real estate as far as building their wealth, or at least helping get them to the next level. So did a ton of research there on real estate investing. Ended up getting my degree in electrical engineering, went to go work for UPS in the engineering department, but I kept doing real estate on the side until finally I felt like I was doing enough investment deals where I quit my W-2, and that was about 15 years ago. Been doing real estate investing since then. Mainly focused on single family in the beginning. Did some smaller multifamily, and then decided to open a construction company at some point about 11 years ago to help scale the fix and flips. And then about 3 years ago, started focusing more on large syndications of multifamily, and that's what I'm mainly focused on right now.
Mm-hmm. And when you started on the multifamily, just to give them context, I know you've got some offers in right now, and you have some that close. How many units are y'all up to currently as a group right now?
Currently 1,720 units.
Okay. And those are easy, and it happened in the first day that you started in multifamily, right? No, I'm being facetious. I know how much work you put in because I've been in person. I've come to the office. Let's go back to leaving the W-2 and kind of starting in single family. That is the traditional route that everybody takes. But when we talked in your office, I think that one of the reasons that you switched was you just saw, like, scalability wise, the headaches were just the same and doing $1 million flip as it was to purchase 1,000 units, right?
Yeah. I mean, the time and energy it takes to do the single family flip, I could be putting the same or maybe a little bit more into multifamily, but I'm building something there that's gonna last longer than a single family flip.
Yeah, for sure. And but you're very disciplined in what you do. Like, you didn't get out and go into the multifamily until you created a foundation with your construction company that you allowed yourself to leverage yourself out to it. I would imagine that there was a lot of work that needed to be put in far system wise and building that company and getting it to a place where you could turn your focus towards multifamily, right?
Absolutely, man. There's only so much time in a day. Trust me, I know. And the only way to have several businesses and be able to scale them at all is you've got to have a good team. You've got to have good systems in place, and that's the only way you can spread yourself out. If you have those systems, those routines, meeting wise, when I started doing, can't remember how many years back, but when I started putting more systems in place and more meetings, people thought I was crazy because I had a meeting every day, which was maybe overkill. But I've learned to kind of consolidate that, and but yeah, man, without that, it's just there's only so much one individual can do, so much you can juggle without having that in place.
Mm-hmm. And when I was in your office, you talked a lot about, you know, there's been some ups and downs with the flipping in the large scale, and the price point that y'all were at was so high. What did you learn from those things that you think has benefited you in the multifamily investing at the scale that you're at, which, you know, when you're purchasing large units and stuff, kind of that, those things, because it's rough, man. I mean, y'all were playing in a high net. You know, it wasn't like you're flipping $100,000 houses. Y'all were doing some $1 million flips and builds, you know?
Yeah, I mean, throughout the years, as the market got hotter, it got harder to find good deals. So, you know, we leveraged the construction company and we started building, whether it was building a second story or, you know, we started tearing down and just building new construction. And these were, like you said, custom high point. I mean, our last two new construction projects were 1.4 million, 1.5 million was the sale price. So as far as what I learned, and I took into multifamily, is adding value. You know, when how to look at a deal and see where we can add some value. You know, with the single family, we knew we could build for a lot less than we can sell it for, so we were adding value in that sense. You know, square footage and being able to put units into apartments is pretty crucial. The first deal we did, we took a space that was being used as a office space and turned it into a unit. And we're always looking for things like that can add to the NOI.
Mm-hmm. And I like to sit here for a minute because, like, that's when I found out about you, was through the multifamily more group, but when y'all closed the big deal in Houston. And was there a deal before that, or was this the first multifamily?
Yeah, no, we did. We had two deals before that one.
Okay. And how big was the first and the second one?
First one was a pretty small one, 37 units, and then 216 units was the second one.
Mm-hmm. And then the third one, the big one in Houston?
1,275 units.
1,275 units. And at any point, did you, in the middle of that deal, did you go, what the hell are we doing? Or was it such a home run deal that you knew that it was, like, on paper, the deal made sense, so it was like, we're just going to figure it out from there?
Yeah, I mean, we knew we were buying it right. The low basis we're coming in at, we knew it was a good deal. You know, raising $22 million, that was pretty new to us. So yes, at some points I did ask myself, what are we doing? But you know, we figured it out, man. We pieced it together and we got it done.
And I think something that I respect about you is you're not scared of the work. You know, like, you know, I've seen you get up at 3 a.m. and drive from Dallas down to the unit. Like, it's in Houston, it's not near you. But something that I talk about and I haven't closed on multifamilies myself, but there's a validation apart from the price that you're a closer. And that's where other deals come in, when you can lock in that deal, right? Wouldn't you agree?
Oh yeah, 100%, man. That's when the traction happens. You know, once the brokers get word that this group can close, the deals start coming out of everywhere.
And where did you find the group that you do have that works on the multifamily? Where did you find these people? Were they already in your business, or did you meet them along the way? How did that work out?
Yeah, so one of them was my partner in the single family. Then John, who does mainly our investor relations, some acquisitions. We had actually done work with him in the single family. We had sold the firm he was working for at that time some properties. So we knew he wanted to do multifamily, so we brought him over. And then Carrie, which was the last edition we've had, we met her through networking at the multifamily events.
And what do you don't have to talk about them individually, but you as just a person and you're going into business with somebody, which partnerships are always interesting, to say the least. What are you looking for out of a person if they are to, let's just say it's a young kid, right? And they're not going to jump into your world. But what are you looking for in the qualities of that human that allows them to be in business with you? More importantly, have a part in the livelihood of your kids and make sure that they're doing what they're supposed to do.
Yeah, I mean, there's a lot there. You know, one is be willing to do the work is one. I know it sounds simple, but seems like nowadays that's harder and harder to find. Expectations, you know, that they're not expecting everything to be handed to them, and that, like I said, they're willing to do the work and go after it. That they're can follow directions is very important. And then just mindset. They've got the right mindset, I think, is probably number one. You know, that they're coming in with a positive attitude, that they see the bigger picture. They want to do it. You know, they actually want it.
I love it. And how did you, and I guess the single probably question you get asked probably more than anything, and I would imagine I get asked too, how did you source your first couple of deals in multifamily? You know, was it relationships with the construction company? Were you mining for deals? Like, you know, I think that's the number one question that every young investor asks is like, where are you finding your deals? Because it's hard right now.
Yeah. I mean, it is. It's still doable, but I mean, we went out and did the things that we saw others weren't. In the beginning, we cold called. We sent out direct mail, and that's how we got our first two. Was through that, and one was like a mixture of networking and doing that. But yeah, man, just getting out there and doing the things that other investors weren't doing.
And on the 1,275 unit, what was harder than you thought, and then what was easier than you thought to take down a deal of that size? Because it's not small potatoes. I mean, there's a lot of people that maybe won't even get to that unit count ever in their career, and to take it down in one gulp is a big undertaking.
What did I think was harder? Gosh, I didn't think anything was going to be easy, so that's a tough one.
Yeah.
So what was harder? I guess, man, just taking it to the closing without any issues. You know, we had a couple big things come up towards the end. We were able to get past it, but they were pretty big. You know, we had one $10 million equity partner that pulled out maybe a month or a month and a half before we closed. So at that point we had raised what we thought we needed. You know, we had raised the other 12 million, and we were short 10 million. So we were able to find somebody else to come in and replace them, but that was a big one. And then easier, the due diligence was, I don't want to say easy, but it went smooth. It went smoother, mainly because we spent a lot of time making sure we had it all set up, but the actual getting there and walking the 1,275 units in the Houston heat. I'm not saying it was fun.
No,
we did have some fun.
Yeah.
But yeah, it went smoother than I thought it might.
Yeah, I grew up there. No, it's not fun. But you're walking units that you're buying, so it's a little bit better. But
Yeah.
but as an operator of an apartment complex, like, because I walked the unit when y'all closed. I came to that event, and I've seen the improvements that you've done. People have spoke about the improvements. Like, I've had Jake and Gino's staff, like, they've talked about, like, George is
Nice.
he's putting a nice product. We see what he's doing. We see, like, the colors and everything. What are the tenants? Because it's more about, yes, you want to buy an asset, right? That supports your family and your lifestyle, but it's so much bigger than that when you're the landlord, especially in what we're dealing with right now. What are the tenants saying to y'all since you've taken over? And is that part of what makes this so much fun, is seeing the transformation? And you still have your bad tenants, obviously, but the joy out of that is really something special.
Yeah, I mean, the ones that have that pride of of the community, they've definitely reached out. I mean, I remember, I think it was maybe 2 months ago or so, we're walking with the lender on one of the draws, and it started raining. We're walking the property, and there's this resident that comes running towards us, and in the rain and everything, and he came up to us and he's like, I just wanted to make sure to tell you guys that I appreciate everything you've done. And I mean, man, he was just, you could tell how happy he was. This was like right when COVID kind of hit. He didn't have his mask. He's like, I'm sorry I didn't grab my mask, and all this. It was a great feeling, you know. That's definitely one of the reasons why I enjoy what we do.
And I think, you know, and you know, I've done a lot of Airbnbs, but I think people lose sight of that sometimes. And I'm not saying that needs to be your driving force, because a deal needs to make sense. But I think they lose sight of that sometimes, and especially what we're dealing with right now, that we as a landlord, you know, they are you, right? This is not some conglomerate, like, this is not some no-face company. This is a man who is spending time away from his family to make sure that these 1,275 units have a nice place to live and call it home. Because when they call it home, they're going to take care of it. They're going to take care of the asset. And I think that's something that doesn't get talked about enough in the multifamily space or single family space.
I agree, man. I agree. I mean, we focus a lot on building the community. We do a lot of events, and you know, people enjoy where they live. Obviously, they're going to take care of it more. They're going to stay longer. So yeah, we definitely build on that.
And I know that it's a big deal because I see it behind you, vision board, and I saw Traction, which is an unmistakably amazing book. What part of your life does personal development / manifesting and everything, and how long have you been in that space? For me, it's been 2-3 years max, and it's changed my life. I've lost a bunch of weight and all that stuff, but what part does that play of you, and where were you introduced to that kind of realm of that?
So I was introduced early on when my first mentor, coach in real estate investing, but I kind of lost it when I got into the grind and I started building the companies. I stopped doing trainings. I stopped listening, and I didn't quite stop reading books, but maybe not as much. And then it was about 4 years ago or so, it hit me again. I'm like, whoa, why have I stopped doing this? And started going back to it. And I mean, it's huge, man. If you don't have the right mindset, you know, you're already losing the battle. If you change that, you know, and you get into the right mindset, I mean, that's when things really start coming together.
Mm-hmm. And it's funny because I had an interview earlier today with a guy who said that he looked at his net worth prior to personal development and then after 2 years later, and it's 5x since that. And I think it's the numbers, the unit counts, the net profits matter. But when you're working out and you're investing in yourself, I think it shows not only as a leader in your business, but it shows in that obstacles don't hold the same weight against you as maybe they would, because you have techniques or you have that positive reinforcement hitting your brain.
Absolutely.
And what this podcast is about, and we haven't dipped into this personally because we've only talked a couple of times. And as a father and as a business owner, you have a lot of people riding on you, supporting your kids, supporting your employees and everything. What does it mean to you? Like, what are you, like, I've never even asked you this, like, everybody's goals change, but like, what is your like why? Meaning, like, what are you after to achieve? Are you just trying to build a lifestyle that something that you wanted that you can walk away from, or is this something that you see yourself doing till you're 70 years old? I know that's a loaded question, and you can answer it in parts. You don't have to do the whole thing, but I'm just curious because I love to understand what makes people tick in meaning, like, what gets them up in the morning every day.
Yeah, I mean, I definitely see me owning real estate and doing deals for ever. Some of the other stuff I'm doing, the construction business and some other things, maybe not, and the reason why is really time. I want the time to spend with my family. I want the freedom to be able to take off and spend a couple weeks, a month, however long I want, with my family. I just naturally, I love to work, so my goal is not to just stop working at any point, but to have that freedom.
Mm-hmm. And it's interesting because you don't, I mean, like, I'm traveling right now, like I'm in California and we're headed up to Oregon next, and there is I think that's what I really think that as I dig deeper and you meet these people, especially in people that we talk to every day, I think that the only currency that exists that matters to anybody that in this business is time. Like, and
Yeah.
It's a currency that can't be quantified. But that's what I tell all the young kids. Like, if you could work now and be the present father that you need to be because you've already created the assets, like, isn't that the most important thing to do?
Mm-hmm.
And it's one of those things that we, as a 9-to-5er, you don't have that option. Like, we don't care if your daughter's sick, you got to come into work. And even though you are busy and you're trying to knock your goals, I would imagine there's a little freedom in what you do, because it's your choice, right? I mean, at the end of the day, time?
I mean, look, I've got work for forever, I've but if my daughter's got a soccer game at 3:00, I can no doubt be there, and I may work till midnight that night, but I was there.
Mm-hmm.
That's what's important to me, at least.
I love it. So what I want to do, and I try to do, especially with investors that are a little farther in the game, if you could give, let's just say, your top 3 things for a lot of my audience is 22 to 32 getting into the game. If you could give them advice, the number one things that you would do to get rolling in investing.
And being an active multifamily investor?
Yep. Mm-hmm.
Get educated, know the business, the ins and outs of it. You can do a ton of research online. I mean, there's so much good free content. So definitely do that. And then once you do that, find which aspect you're the best at, and then own that and bring that to somebody that's experienced, and learn from them. Tell them, hey, look, I'm really good at raising equity. Give me a list of people, I'll call them all, I'll raise the money. I'll work for free till we got something, and that should get you started quickly.
Mm-hmm. Yeah, and I think what I think what ruined me in the beginning is there's so many avenues to pick, and is that I was like, well, I'm going to do this, and I'm going to flip, I'm going to do Airbnb, and I'm going to do this. I read a report like 3 days ago that said the average Gen X, the Gen Z or whatever, is going to have 18 careers before he's dead.
Wow.
So you as a real estate investor understand that if you flip or you buy single family rentals for 5 years to 10 years, it's not going to be the everything that you do. You grow, you scale. But I think what we have a tendency to do, and I'm guilty of it, is to scale before we're ready.
Yeah.
Yeah. And you haven't, and as my mentor would say, you haven't earned the right yet. And so make sure that your systems are in place. Make sure that the people that are in place understand that we're on the same page, but more importantly, understand why we're doing it every day.
Yeah, that's important.
And I think that we, because I know you have a lot going on in your head, and I would imagine you're better at it now, but I have a tendency to keep it in the head and not communicate properly sometimes. And then I'm like, hey, why don't you understand? And they're like, because you're moving 90 miles an hour and we're moving 45 miles an hour.
Yeah, no, I've definitely had that that issue throughout the years. I've gotten better now. I kind of, I have everybody kind of repeat, like, okay, just so we're on the same page. Because I think my mind's just moving quick.
And I think that the greatest thing that I understood about myself is that, and my business partner taught me this, and he was like after working with me for like 3 months, he pulled me aside and he was like, hey, you're gonna kill us. He's like, you literally moved like a fucking tsunami. He was like, I can't do this. He's like, you have to. So what I've done is I've understood, like, even though they might not take the time off, I've allowed them to say, hey, if you want to take the weekend, take the weekend. If you want to take the week, take the week. But they won't nearly take it, but we've given the option for them to take it. And you basically understanding that, like, okay. And so like there's like people think that you need to commit to something, but mainly, more importantly, it's proper communication, but it's also using your words and understanding that your assistant or your business partner or your general contractor is a person just like you, and he's got deals, like, and you say like, hey, Frank, like, I can tell something's off today. Like, those 5 minutes might change his whole world, but by you yelling at him and pressing him harder is only going to push him farther away.
I agree, man, 100%. I see that a lot where there's conflict, and it doesn't have to be that way. If you're all trying to work together for the same goal, do what you said. Dig in what's going on. What's the problem versus why aren't you doing this?
Mm-hmm. Yeah, because obviously, with what we're dealing with and COVID and everything, it's thrown a lot of people for the loop. But people like you and people that I surround myself, my mentors and everything, is they're adapting, and they're saying, okay, this is where we're at. We're not the joke I have. This is my favorite joke when COVID hit. I love this. So there's a 30-year-old that in 50 years will be 80, and he's sitting on a porch, and he's gonna go, COVID ruined my life. And I'm like, it was 6 months out of your 80-year life. Like, you know what I'm saying? Like, I had a big investor tell me this the other day. There's nothing that is coming in this world now, meaning distant learning, education, virtual tours, homes, Zoom calls. He goes, there's nothing that wasn't going to happen 10 years from now. It's just happening now because of COVID. So you can either complain about it or you can learn. And there's a guy, I'm going to butcher his name, but Jim Wick or something. He's on Impact Theory a lot. And he said that the best currency moving forward in this world is your learning ability, because everything's going to be changing. Like, technology is going to be changing. The way we do business is going to be changing. So if you're flexible and able to adapt, then you will stay ahead of the game.
I mean, that goes for any business. You look at all the businesses, the ones that are able to adapt and are more flexible are the ones that are the most successful. I mean, Amazon started selling books. I mean, look what they do now. And Sears didn't want to do stuff online. Look at them now, you know?
Yeah, and I think we as people have been through whatever we've been through. And I just had a call with my coach, and he said, the path that you're walking, regardless of the path, you've burned the boats, and you've burned the boats, and you're an investor. And so here's what Mr. Abreu is going to tell you is that it doesn't matter. It's going to get harder. It's going to get easier. It's going to get harder. But the path needs to be walked by somebody, because it's either you or it's somebody else.
Yeah.
Yeah. And so as you continue to move forward, let's just say for the rest of the year, let's keep it simple. What are you going to continue to do as a multifamily investor and operator to continue to thrive in this new whatever we're dealing with? Because we don't know what's coming. We don't know how long this forbearance is going to go, and so on. And I would imagine that having as many units as you had, there is a concern, about tenants paying and so on and so on, but there's nothing you can do about it but control what you're controlling. So what are y'all focused on for the rest of the year to make sure that you're coming out ahead?
Yeah, I mean, we put an insane amount of focus on operations when COVID hit. Not that we were ignoring it by any means, but I mean, for a couple months there wasn't really much we could do other than that. So we've put a lot of systems in place on the operations side. We've adapted to what is the new norm, at least for right now. Making sure that we can show and lease our units without anyone having to step foot on the property. And then collection wise, putting systems in place to stay and communicate with our residents, whether it's through text or online, apps, software, whatever it is. And then we're still looking for properties to purchase. Like you mentioned, we've got one right now, and actually working on two right now. So we're going to keep purchasing, acquiring properties, but we're going to be careful in our underwriting. We're going to make sure we put enough reserves in there, and that we're still buying right. I feel like if you're still purchasing the property at the right basis, and it cash flows, then you're good.
Yeah, and I think one of the great quotes I heard right when the pandemic hit is there's behemoths, meaning there's eagles being built right now, like giant businesses that you won't hear about for 5 to 10 years.
Yeah, like in the background, I guess, or
yeah. Well, basically saying that, like, in times of uncertainty, there's people that are going to shut it down, and there's people that are going to double down on their people and their systems, and they're going to grow. And when they come out, this thing gets right, they're going to be 20 years ahead. Yeah.
I mean, you've seen it. The ones that are shutting down and just kind of, like you said, they don't have the right mindset, and they're just like, oh well, I can't control this. What am I going to do? I mean, you can always control what you can control. Like, me, I don't focus that much on, and this is always, I never watched the news. COVID was like the first time I started watching news, and who knows how long, just because things were changing so often. But right now I've gone back to, it is what it is. What am I going to do? And I've just been focusing on what I can change.
True story. I haven't told anybody this. I turned the news off on like March 17th, and I turned it back on for like 5 minutes in like late May, and I was like, it was almost the same headline. I was like, no, I didn't miss anything. I'm good. I just turned it off.
Yep.
Yeah.
I mean, all right.
You know what I'm saying? I mean, because we have a choice every day to wake up and be the best version of ourselves. And guess what? No news anchor is going to tell you how to be the best version of yourself. You got to look in the mirror. And for me, and this is just me, it started with my health. It really did. I feel like it's and any clients that I coach, it's a non-negotiable. You have to work out if you work for me, because I think it's the foundation for everything.
Yeah. I mean, what is it all for if you're physically not fit and
Yeah.
you're not going to be here that long, what are you working so hard for?
Yeah, it doesn't matter. Well, dude, I know you're busy. I want to respect your time. I know you have a Facebook group. You've got a lot. Your social media is fantastic. How does everybody get a hold of you and stuff like that?
Yeah, they can search my name, Jorge, Jorge Abreu, on Facebook, Instagram, LinkedIn. Like you said, we're pretty active. Can also go to my website, elevatecig.com. We've got a free ebook on there on the benefits of investing in multifamily. And if they want to shoot me an email at Jorge at elevatecig.com and mention this podcast, I can send them some free checklists on what to ask deal sponsors. I've got one for due diligence, and I've got a couple other ones I can send them.
Wonderful, man. Well, I appreciate it, and I really enjoyed the event y'all did down in Houston, and I can't wait to attend the next one. And just thank you for everything, man.
Yeah, we'll definitely have some more.
You got it. I love it, man. Well, if you like this episode, guys, make sure you share it with your friends. And as always, thank you so much for listening, and we'll see you next time.